Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday, the 14th of July. There is a slight move towards risk aversion again today. This sort of swinging around of risk appetite back and forth, up and down, seems to be a feature of recent sessions, and it's again playing out today. We saw the Wall Street markets sort of fall away quite sharply actually into the close on the S&P 500 in the final few couple of hours, but Wall Street a little bit ticking higher on S&P futures today, sort of hinting a little bit of stability. And you can, to a certain extent, see that playing out on European markets. But to be honest, they're still edging with a risk appetite of negativity. Across Forex majors, interestingly, lacking real direction. Dollar is sort of ticking a shade higher, nothing too decisive. And that sort of predominantly coming about through sterling weakness, which has pulled quite lower on the back of the GDP data for the UK. GDP in the UK for the month of May really did disappoint, didn't it? Month on month, 1.8% versus the expectation of a bounce back of 5.5%. So that's really sort of weighed on sterling today and has sort of impacted there. But it's interesting that we're seeing this sort of toing and froing of risk appetite, little real direction. I mean, you've got treasury yields which are doing very little really. A shade of a sort of downside negative bias, sort of adding into that sort of risk negative outlook, but generally speaking, nothing too decisive. And to be honest, most of the majors that we look at are fairly ranging of outlook at the moment. Now we've had some other data and some key look at the Chinese numbers for trade overnight, and what we saw was the trade numbers actually not too bad, and they came in fairly positively. But also what we saw were the disappointing outlook from Singapore for the second quarter, disappointment on the GDP numbers there. So it sort of added into the risk aversion that we've got playing out today. Now, in terms of European data, as I said, the UK GDP numbers, but also German ZEW. Look at that, German ZEW. Current conditions falling away quite sharply. Compared to expectations, actually only increasing marginally from last month, but expectations were for a quite significant jump. Didn't get that, and subsequently the economic sentiment for the ZEW didn't really pick up as much. So it fell away more than it could have done, which, yeah, it's a bit of a disappointment there. But still, sort of edging, as again saying earlier, edging towards a marginal risk negative outlook. So aside from that, we've got the US inflation numbers today, inflation data for June coming out, and the expectation is that it's sort of basically holding fire, really, a shade lower on the core, ticking up on the headline, but I think the markets will be looking past that headline data to really see that core number dropping a slight amount to 1.1% from 1.2%. So not really impacting in any real way on Fed policy expectations there, I can't imagine, there today. So, okay, that takes me on to my chart of the day, which is the German DAX. Now, what we've seen in DAX has been that it's remained in this trend higher, and you can actually see a sort of a tighter uptrend, but it continues to post these negative candlestick setups. That's now 7 of the past 8 sessions, seemingly is setting up as a mild negative bias on that candlestick. And yeah, it just sort of suggests that the market is still struggling to really come to terms with the fact that it's still ranging, and you can see that through the daily indicators where the RSI has rolled over again back under 60. Stochastics, again, looking as though they're about to roll over. MACD lines didn't ever really get going in the latest rally. So that is a concern. And the fact is that we're sort of, again, sort of just drifting back to this pivot line, this pivot at 12,470. You can see that on the hourly chart. It's been a bit of basis of a pivot in recent weeks. And it's sort of dragging back towards that level now, breaking underneath that level. You could likely to see a more of a corrective look to the market again, and you'd be looking out for the hourly indicators really. And the hourly indicators are just sort of ticking over again, but only within the scope of what is essentially a range play. And as I said, that 12,470 level is important because you see a close below that, you really are sort of starting to turn corrective on the DAX again. But for now, we're still holding on to the trends. But as with a lot of the risk appetite plays that we look at, yeah, it's just developing into more of a range than the uptrend. But even though the uptrend is holding, it's being tested and coming under pressure. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.